Good morning, traders and investors. Roger Scott here, Senior Strategist for Wealth Press. Today is Wednesday. It's hump day. It's June 7th. Where did the month go? It's about 7:45 in the morning. The market's going to gear up to open up in about an hour and 45 minutes if my math serves me right. Now, folks, for anybody who's new here, make sure you go to YouTube, Wealth Press channel, like this video, subscribe to our channel, and there's a link to subscribe to my Telegram channel there. Or if you're too lazy to go there, just go to rogerscott.com/Telegram, and it'll give you full instructions to sign up. Now, I know who you are. Make sure you comment below this video. And if you have any questions, ask me there so it can benefit everybody watching this. All right? Now, let's get into it right now. Now, as you can see here, the market's gearing up to open relatively flat. It's still trying to figure out what to do with that big gain that we saw in the Dow on Monday of about, what, 700 points, or was that Friday? Bottom line is, if you look at the Dow Jones right now, you will see that it doesn't really have a major catalyst right now to rally, and it looks to me like it's holding on. Now, I still believe the Dow can go up to about the 34,300, 34,250 level from the current 33,850 level, but I don't see any major upside there because there's no major catalyst for the market. We are overbought right now, and it looks like it could come back down. And there's a lot more short opportunities, especially yesterday, than there are long opportunities right now. So we got to be extra cautious with what we're seeing with the market right now. Really, really cautious. As far as technology, we've already started seeing a descent. As you can see here, we're grossly overbought. We're about as overbought as we've been in a very long time. One of the highest levels we've seen since right here or right here. This thing is ready to cool off. Now, we may sustain ourselves around here, but look at the non-weighted right now. It just looks like it needs to cool off. We desperately need the tech stocks to come back, the FANG stocks to come back down. We're already curling on the RSI. And I think we're going to go back to the base. I think all of this this craziness that we saw with the 5 or 6 tech stocks is going to undo itself, and we're going to come back down to the base. Not necessarily go lower, but go down to the base. Now, another reason why I think we're a little overdone here is volatility. Look at the VIX index. This is volatility. Volatility rises when stocks go down, and volatility goes down when stocks goes up. Now, stocks have been going up pretty good, especially tech stocks. So implied volatility has been going down. But if you look at it on a weekly chart, you'll see that implied volatility is really low right now. And I think we're overdue. We're also having divergence here. Look at that. Momentum levels cannot sustain price going this low. So that tells me it may be a good time to start buying some options on volatility. Now, in terms of what I'm looking at, oh, you can go, let's see here. 14 days would probably not be enough time. 21 days, I would go with the monthly here. Go with the 42 days. If nothing happens in, actually, you know what? Go with the 21 days. If nothing happens in 10 days, just get out of it. Let's see here. It's at 14 right now. The 14 calls. Wait for the market to open, but you could see here what the last trading was. You could probably get the 15s for about $2. $2, between $2 and $3, that's what you should be spending. And I do like volatility right now. Another asset that I think is starting to come up is the bond market. I think bonds have bottomed out over here, and I think they're ready to come up because there's really no major catalyst for interest rates. And we already know with about a 75% certainty that they're not going to raise rates in the next 10 days. Actually, less than 10 days, in 7 days, 6 or 7 days. So I think it's on the 13th or 14th, one or the other. And I think till then, bonds are going to have a reprieve because interest rates are going to stay a little bit lower on a wait-and-see period to see what happens there. Now, let's talk a little bit about the broad market. And I'll give you guys some red meat today. I'll give you a long trade and a short trade, some actionable trading for midday. So weak data from China stoked investor concerns over the strength of the global economy. China is one of the reasons why energy sector hasn't been doing so well lately. We did see a major surge in financials, which really put us in a bad position because we're short regional banks right now. And they were up 5%, so we took it under the chin on this one yesterday. But look, my job is to report the news. If I don't see a if I don't see a continuation of a down trend, which I think I will, we still have plenty of time left, I'll liquidate the position, but I think we still have some time left on it. And I'm still quite bearish on the sector. All we need is one or two negative news on bank stocks, and ba-boom, there it goes. Micro, advanced AMD climbed more than 5% after Piper Sandler raised its price target from 150 from 110. That's really significant. That gave us a little boost on the semiconductors. Coinbase, got to watch those cryptos. This is why I like trading crypto-style assets on stock exchanges instead of Coinbase. This is what kind of stuff Jeffrey and I were warning you about during our webinar. So Coinbase plunged after Securities and Exchange filed a lawsuit against the crypto exchange alleging it's operating as an unregistered securities broker. How dare they? It was expected. It really was expected. Former federal chairman Clarita told Bloomberg, now this is where it gets good, it was unlikely that the Federal Reserve would start cutting rates until 2024. That's a pipe dream, folks. It's just not going to happen. I do think if there are cuts, it's really a 2024 story. And remember, we're only halfway through 2023. Meanwhile, U.S. futures have priced in a 76% rate hike percent odds of a no rate hike and about 23.5% chance of a 0.25% basis point rate hike based on the current monetary policy. Now, keep your eye on these numbers, but if this number stays 76, 80%, anything above 65%, we should see more upside on the bonds, because then it would be consistent with the story that there's not going to be any surprises in the next week, and if that's the case, bonds should rally. World Bank on Tuesday raised its 2024 global GDP forecast to 2.1 from January 1.7. However, the development lender cut its 2024 global GDP to 2.4 from previous estimate of 2.7. And if China continues giving us bad news, it's going to put a lot of pressure. We're very, very delicate situation right now, and we don't need anything putting pressure on us. Today, we're looking at crude oil inventories. We're looking at estimates of 1.022 million compared with 4.88. I'm more concerned not with the number. I'm more concerned with how the energy complex reacts to the number. Matter of fact, if you looked at energy complex last 2 days, they had some really positive news. And what did the market do? It went down on the news. It didn't go up. It went down. So I want to see if there's anything that can actually cause the energy market to rally. We're also going to be looking at the U.S. trade balance data. Economists are looking at negative 75 billion compared to 64 billion negative last time. That doesn't seem to be impacting the market, which is just crazy. Europe is down as investors digested weak China trade data while awaiting key central bank meeting next week. That's the 13th and the 14th. That's what I'm talking about, when the Fed is supposed to probably not take any action, and Squirrely Powell is going to continue telling us how they're going to lower rates or some crazy stuff like that. I don't listen to anything he says anymore. I just wait for the minutes, which come out about 3 weeks later. Luxury and chemical stocks are leading the market lower. We have to be mindful of that. In China, they closed slightly higher, as positive sign in geopolitical outweighed weak trade numbers. So geopolitical tension is being lowered, but their actual economy is not doing so well, which is why they're so positive on their geopolitical. They want the politics to go well because nothing else is. Data on Wednesday showed China's exports contracted more than expected in May. That's not good. Amid persistent weak global demand and imports declined. That spells inflation and recession to me, just saying. With the country's trade surplus hitting its lowest level since April of 2022. On a positive side, U.S. Secretary Blinken is anticipating to travel to China next week for a high-level talk. Two U.S. officials and source familiar with the matter told CNN as the two countries work to normalize their relation. Don't hold your breath for that. At the same time, Japan, after they've been rallying like madmen, closed sharply lower, posting its biggest decline in 12 weeks. They've had a lot of upside lately. As far as earnings today, you've got Campbell Soup, one of my favorite stocks that I traded last 12 months or 2 years, and GameStop. Everybody's looking at GameStop still. Why, I don't know. But they did have an ascending triangle going into the session, and I warned everybody that they may actually do well if it breaks out to the upside. I believe that there's a much higher odds of it breaking down to the downside because the long-term trend is down and the stock doesn't have anything good going for it. But this stock has been surprising us ever since. Again, keep your eye on the market. I think if the Dow Jones doesn't top out around here, it's going to top out close to maybe another 2,000 points higher, and then it'll cool off. At the same time, I'm looking for the QQQ to start really selling off. It's not looking all that great. I don't see a major catalyst for tech to keep pushing us higher from these levels. So I think that's going to curl as momentum levels already are. And even when we look at a 5-day RSI, you'll see it's just way, way, way too much. Way, way, way too much, too fast. And as far as sectors, the only sector that I'm really liking right now are industrial. I like industrial. I think it's got a little bit more. And let's see here, basic materials. I would be really cautious right now with everything else. Like, look at technology. I mean, look at this thing. Look at this momentum levels. This thing is way overdone. I think it's going to come down. So what you want to do there is you want to find the weakest stocks. Now, remember I always tell you I'm going to give you some hot trades? Well, today's the day. I'm going to start off with the short side. Now, instead of going short the QQQ, there's a lesson here. Instead of going short the QQQ, which is up here, or which trend is up, or XLK with a real strong uptrend, that's a lot that you have to go against. Why not short the weakest stock weakest chip stock or the weakest tech stock? Look at the trend on this thing. It's going down. It's overbought right now, and I think it's going to cool off. I would be looking at the put option that expires in not 9 days. 9 days is too quick. How about 23 days, all right? You got plenty of open interest here. If it doesn't do anything in 10 days, just dump this thing. And I'd be looking at the 116 put right here, or maybe even the 115 put. They have very low spread, very small spread, 10-cent spread between them. This one has like a 10-cent, this one has like a 15-cent spread. So I would be going to 6:30 at the end of this month. We'll give you a couple of weeks. If nothing happens in 2 weeks, just get out of the trade. That's the best way to deal with this, and I'd want to hit it to the downside. That's to the short side. Now let's talk about the long side. Let's look at the CSI scan, and let's see what we're looking at here. All right. Now, we got to be really careful with technology right now because technology is in the crapper. But GE's looking good. Win looks like it's making a comeback. Lamb Weston isn't looking all that bad. I like Copart, CPRT. I think it'll break out to the upside. If it doesn't break out to the upside in the next few days, I would just get out. And I mean get out. Another one that's looking really good is Cardinal Health. But I would stick with CPRT. Let me go to CPRT. CPRT. This one's looking really good. It's got a nice ascending triangle. And it looks like it's going to break higher. So I would be going to the option. Not really much space here. So you'd have to go to about, you got to go about 44 days out here. And in this case, what I would do would be, let's see here, January, February, March, April, May, already past earnings. I would go with the 90 strike price right here. 90 strike price, not very expensive. And if you want, you can offset it with the 95 because you're not looking for more profit than that. So, but I would just buy the 90. It's less than $2. And that's how I would deal with that situation. Now, before I let you go, I told you I was going to give you some long trades and give this trade about 10, 12 days. If it doesn't do anything, just get out. Okay. So CPRT for the long side and Qualcomm to the short side. Now, buckle up. Today's a big day. Huge, huge day. Because today, 1 p.m. Eastern time, that's right, Wednesday, hump day, the 7th. It's not the 6th today. This is showing you yesterday's data. Today, I'm going to do something very special. In order to celebrate the 1-year anniversary of my most celebrated and important discovery of my 3-decade career, I'm doing something crazy. I discovered and helped traders a lot last year by discovering a trade setup that gave me 15 winners, 15 straight winners in a row last year. Can you imagine that? I'm giving away the biggest gift that I've ever given before to celebrate. And I'm going to show you today how we generated those 15 winners in a row. I'm literally giving away the jewels. It's like Christmas in June. You don't want to miss out. How to trade the long side, the best patterns to trade, the most high probability patterns to trade. Folks, it literally is like Christmas in June. You don't want to miss out. Make sure to click the link below this video. Don't miss out. It's happening at 1 p.m. Eastern Time today, Wednesday, June 7th. And be careful with the market because things can go either way. Bye, guys. Have a great day, and I'll talk to you soon. Bye.